Yeah, I think there's a kind of a consolidation. Obviously, the majors, Bitcoin and Ethereum, have really outperformed, and there's a significant narrative and meaningful structural tailwinds behind Ethereum over the next 12 to 18 months with Shanghai and a lot of the staking becoming liquid. I think on the further out the tail side, you have to kind of still boil back to the mission critical pieces of infrastructure. So there's been a lot of talks around the liquid staking derivatives, kind of the more basic primitives required to make the ecosystem function. I think the things on the longer tail of the spectrum are going to continue to struggle, the more speculative. And that's kind of the problem plaguing crypto right now is with on-chain activity lower, new addresses lower, there's not really an uptick in activity that coincides with an uptick in revenue. And so most protocols, projects, and startups in the space are facing a little bit of a crunch on the budget side, and I think it'll remain that way. And one of the other things is, unlike the equity markets or other more liquid trading asset classes, you don't have as much price discovery to the downside in crypto because it's very difficult to short assets. And so you have fund managers who maybe like to put, they run long short vehicles, they'd like to put expressive view to the downside, but there's just no way to do it. There's no borrow of the assets, and if you do it on exchange, you're taking a lot of risk because these things are illiquid and can squeeze in your face. So I think that's a theme we'll continue to see as a consolidation towards the major assets.